What's up, people? Welcome to another Market Watch episode. I'm your guy, Erik T. Jackson, and he's your other guy, Eddie Chinea. What's up, buddy?
Oh man, you good, coach?
Yes, sir. Yes, sir. I'm pretty doing good. Uh, so it's our third Market Watch episode, our fourth together, but our third Market Watch. So I thought that since I don't think we really got into our backgrounds and that type of thing, and what brought us to this point. So I thought sharing that information might be good for the listeners. So can you just give the listeners a little bit of your background, and I'll give them some of mine?
Yeah, man. So got into investing because my dad's adamant investor, man, and so it was real good to learn at a young age, man. I think he got me going at like 12 years old when we started to invest. We were dabbling penny stocks, man. Doubled my money in in a month, and just from then on, man, it was always something that I love to do. You know what I mean? Got a business background, from college, but
Okay.
I don't have a Wall Street pedigree. I don't have that, Ivy League school and like that. I'm a Florida Atlantic grad. I see with the Rockets hat too, man. I see that.
Yes,
Yeah,
sir. Yes,
yeah,
sir.
no, but it was always good to learn, man, and to learn at a young age, the value of a dollar, man, what it means to, eventually
Already.
want to retire. You know what I mean?
Yeah.
So
So if you have a business background, obviously, uh, business was sort of in your mind at one point, and you've always sort of been in that direction.
I've always talked about, man, I don't work for anybody, be my own boss. You know what I
Yeah,
mean?
yeah, yeah.
And it just took, you know what I mean? I guess, a little push, you know what I mean, after wanting to get out of coaching and everything to be able to do that, man. So yeah, with a business background, with a business degree, it was always something, everything operates as a business anyway.
Right.
Schools, hospital, everything operates as a business, you know what I mean? So
Yeah,
why not put that stuff to use, man? I got to teaching business classes and starting,
yeah.
showing kids, teach them like, yo, there's a way to do this, man. There's a way to invest and a way to do it. Like, man, I'm
Absolutely.
doing this like now, I need to be doing it for myself, So we've
Yep,
always been adamant on investing, man, and putting money away, the rainy day fund and all that stuff. And like I
yep.
said, man, just, having that business background is great, but try to, tell everybody that's out there, man, that watches, guys, you don't need a business background to be able to do this stuff, man, to be able to
Right.
invest.
Yes, that's definitely true. But I want to say that I think that business is necessary for just a regular kid or student growing up. I'm not sure all high
Sure.
schools, mostly high schools, they don't teach like business or investing or that side of it. But I think that all kids need to grow up with a business background or finance background or something, man. Even if they aren't going to get into it, I just think it'll help them in their daily lives so much, you know. Uh,
Yeah, that's for sure, man. You get a lot of people that because whether it's because their parents don't know or their parents are afraid to do it, so they don't put into those kids. But I wish, man, and I truly truly wish that schools would make how they used to have PE mandatory and all that stuff, man.
yep,
Making some form of personal financial literacy a requirement to graduate.
needs to be a requirement to graduate, bro.
Yeah, man. Checking
Absolutely.
accounts, savings accounts, how to pay your bills, debt, credit, man,
Hmm.
insurance, investing, savings, how to apply for a mortgage, what I mean? How to fill
Yeah.
out job applications, you know
Yep.
what I mean?
Yep.
And telling these kids, man, I used to give them a major grade saying, hey, man, we're going to fill out job applications and here goes some of the deals. You don't fill out in pencil, blue or black ink, gonna be filling out in
Yeah.
red and green, all that stuff, you know what I mean?
Absolutely.
And things like that kids don't know, man. How to, write a check, which I know that's kind of obsolete now, but how to write a letter in an envelope and how to fill it out, things that these kids, don't
Right.
know. And,
Right.
things that are going to help them in life. I mean,
Yeah.
realistically, you won't pay bills the rest of your life. I promise
The
you. Even if
rest.
you don't have to pay bills, you're going to have to deal with money in some way, shape, or form. So you better
Wh-
learn how to do it, responsibly.
So whenever you start working, you're paying the IRS. So you're paying somebody as soon as you start working.
That's it.
So if you can work at 15, you need to be required to know how to pay bills and know at least a little financial literacy at
Sure.
15. You know what
For
I'm
sure.
saying? So my background, it may be similar, maybe a little different. I grew up like an artsy guy, man. I was a songwriter.
Mm.
Uh, I wrote books. That's the type of dude I grew up as. So business wasn't at the forefront of my mind finance, investing, none of that was at the forefront growing up. In college, I was a communications major, double major in kinesiology. Uh, so I had to live a little, you know.
Yeah.
And once I started to live, I real, I started developing certain principles, reading certain books, and that business mind sort of started to develop in me, you know. So when I went back to grad school, like 8 years after I got my undergrad, uh,
What in the world? My bad, man.
that's all good.
Random videos playing, man. But go ahead, man. Go ahead.
Yeah. So 8 years later, I went to grad school. I said, you can get a graduate degree in anything. I chose an MBA, a Master of Business Administration, just so I could uh, cover things that I hadn't been taught when I grew up. You know, economics. Man, it taught me so many things just getting that degree that once I got the degree, I wanted to take it even further, because I still wasn't investing, you know. So once I got the degree, I started doing some other things within the business realm, and investing popped up, and the value of a dollar and time, so I'm thinking now, if I'd been investing in college, what it would be worth like 10 years later when I started. And you know that right there got me thinking a different way. And so, I started investing then. After I started investing, I wanted to get as many people as possible to invest. So we started doing that. I started talking to different people. People liked what I had to say. So I jumped on YouTube, said, let me start doing a few videos. Those were, pretty popular. And here we are, man. Here we are. I met you even before I was investing. I met you as a coach, and didn't know you were a business-minded guy. And I don't know if you knew that I was a business-minded guy, but
Not at all, man. I'm just finding out you had an MBA. So that's my next one, man. So I got my master's in education administration, thinking,
okay,
become
yeah,
an assistant principal or something, or going to athletics
absolutely.
and become an athletic director, assistant athletic director. And now, I'm ready to go back to school, man. I want to go
Get
get that MBA. I do. I
absolutely,
really do. And I want to go to class, and I want to sit in class. I want to do it online like I did my master's. I want to
absolutely.
go and sit in class, man, and put that, pencil to that paper, man, and get
There
to
you
work.
go. There you go. It's a lot of time investment, but if that's something you want to do to improve on what you're already doing, man, I would recommend it wholeheartedly, uh,
Can't hurt. Education can't hurt. You know what I mean?
at all. Like you
And
can
learning to,
be,
learn. I'm a lifelong learner. I consider myself a lifelong learner, man. I was just telling my students the other day,
yeah,
excuse me, that I love to learn something new.
yeah,
Like, and it could just
me
be
too.
random things, man. Like just look, we were talking about billboards in my advertising class, and I found out that in 1949, Alaska banned you are not allowed to have a billboard in Alaska.
Really?
Yeah, just I mean, I was like, man, they didn't want to take away from the scenery. You know what I mean?
Yeah, yeah, it's beautiful
Um,
up there. Yeah,
But again, and the
yeah,
crazy thing is, like, again, just a random example. But man,
right.
I love to learn, man. I love to
Absolutely.
learn, and it
And I
can't do anything but help you in life.
absolutely, man. So if anybody's watching this, you're always going to learn. You're going to be learning new stuff or missing opportunities to learn new stuff all the time. So you might as well take those opportunities and learn all you can and whatever it is you want to learn, because they'll be there for you, man. They'll help you out.
For
Uh,
sure.
so let's jump into uh, FTX, man. Uh, and so last week we talked about the lottery and how lottery winners can lose $50 million, like, over a course of years. How do you lose $16 billion in over the course of a week, bro? How does that happen?
So, the deal with that stuff is, and let me start with this. When it comes to crypto,
Yep.
yes, I have some in my portfolio. I do, dabble in crypto a little bit, but it is tough for me to go full on, just say, hey, I'm just gonna be a crypto investor, because it doesn't exist. You know what I'm saying?
Uh-huh.
It's a woozy. It's like, it's fairy dust, man. It's binary code. It's ones and zeros. I want somebody to pull out a Bitcoin and show me an actual Bitcoin. You know what I mean? So I have a
Nobody's
hard
been able to do it.
time. Yeah, and I have a hard time with and putting too much or investing too much into it because of
Mhm.
things like this. So, you
Right.
ask how did this thing go down? Well, he had a couple of subsidiary companies, man, and I think one of the ones was Alameda Research, and I think biggest deal was there was money being funneled from FTX. Right, they created their own token. Um,
Okay.
had other people that were investing in and buying it up, and I think that was kind of one of those that let's drive this price up. And
Did you have
drove
any of
price
his
up.
token? Did you have
No, I
any?
did not. No, I did
Okay.
not. Not have any of that. And he had other people that went to invest. I think the CEO of Binance was one of the major holders of it.
Oh wow.
And
Okay.
Coinbase, I believe it was,
Yep.
released an article and kind of put it out there like, hey man, there's something going on with the balance sheet here. Like things are not balancing up. And they went through and they're starting to find that, hey man, this dude was they were insolvent. You
Oh
know what I mean?
wow.
They couldn't cover expenditures, man. So you're looking at things like shareholders equity, and
Okay.
it's a big indicator for it, right? So if you take what a business owns, subtract from it what they owe, and their assets minus their liabilities, can give you shareholders equity, and their shareholders equity was, I guess, very very negative. So he
So
was looking
he
for something like $8 billion to cover that gap of
to cover that gap. Absolutely.
yeah, man. And I think I think that there's a lot more to the story, and I think a lot more of the
Yeah.
stuff is going to come, to the forefront once they, continue to investigate and keep digging a little bit.
Yeah.
We talked about it, I think, 2 episodes ago, man. What happens with these dudes? And it's greed, man.
Yeah.
Like,
So
have
that's what it
enough.
was. Because he
Yeah,
said, so from what I read, he said that he should have never uh filed a Chapter 11. He said once he did that, it gave his investors an opportunity to go after him. But if he'd never filed that, he still might be in business. I mean, what do you say to that?
man. I don't know. There was also, word that he had put out that, a bunch of, millions of dollars of tokens had gotten, hacked right after, all this stuff came out.
Uh-huh.
Again, I think that there's more to the story, man. I don't know. I wasn't there. I'm not a part of the investigation or anything, but where there's, where there's smoke, there's fire. You know what I mean?
Absolutely.
And I think
Absolutely.
that there was, probably money being funneled and, just not doing things the way they're supposed to. You know what I mean? When you're talking about your balance sheet and talking about your
Uh-huh.
corporate documents, man, there was, I mean, unprecedented how they were, uh, that like there's a complete failure of corporate controls. You know what I
Yeah.
mean? There was
So
no
that
trustworthy
happens.
financial information and nothing. You know what I mean? That was there, and I think that it caught up to him. You know what I mean? It's like a Ponzi scheme. You know what I
Okay.
mean? Not that he was running a Ponzi scheme, but after a while, it's just you can only hold on for so long, and once those investors stop, it's like, oh man, and now people want to cash out. Now what? Look at Bernie Madoff.
So it's not exclusive to this being a crypto firm. It just was bad business all around.
I think so, man. I think again, I'm not there. I wasn't part of any of that,
Yeah.
but just knowing that something had to have been going on for Coinbase to even want to release that information. You know what I mean?
Hmm.
Like there had to have been something fishy going because Binance was going to buy them out, help bail them out. Right,
Yep.
their major competitor rival was going to bail them out, and then
Yep.
the very next day, it was like, yeah, we're not doing that. I mean, no due diligence. Those guys didn't, didn't they, some, like I said, where there's smoke, there's fire, man. I think there's going to be a lot more to the story.
Uh-huh.
Continues to unfold, man.
Already. Already.
Yeah.
Okay, so moving on, the you want to talk about the dovish actions in the market. What's going on there?
So, just again, listen to the talking heads. The Fed meets and they start speaking. It could be little things, either the way how they say it, or a little piece of what they said that gives investors hope. And when they hear that, like, hey, the Fed might be pulling back because the U.S. PPI number came back and it's numbers are coming down a litle bit. So
Hmm.
give people that hope that, hey, man, you know what, inflation is starting to get under control and things of that sort.
Yeah.
That when they make mention of some of those things, that that dovish part comes in and people start to, it's that rally cry, right? So everybody gets excited that, hey, man, the Fed may not be going, another 75 basis points, another 50 basis points. That maybe over the course of the next year they might go, maybe another full basis point, but going a quarter at a time, as
Okay.
opposed to these 75 basis point hikes. And you know what I mean? And it's hoping that bring interest rates back down a little bit, especially in the mortgage industry, man, right now.
Hmm.
Well, look, I'm at a 2.6. And if I were to sell my house and go buy something now, with rates being what they were over the last, 2, 3 weeks, man, six,
Hmm.
7%,
Yep.
you're losing money.
Yeah. Yeah. Already. Uh, so uh There was any hawkish actions, or it was just straight dovish going
I
on?
think I think what they're trying to pull out of there is that there's hope that this is going to, that they do have a plan, that it is starting to, what they're doing is starting to have the effects that they want.
Okay.
But that does not mean that they're done, hiking rates.
Okay.
Even with some of that, dovish policy, assumption that they have, that there's still going to be more rate hikes. You know what I mean? So people need to prepare for that. And again, you talk about the financial institutions and those guys like that, man, that run this stuff.
Yep.
Those are the ones that are even making price moves. When the everyday investor, I go out and I buy, 10 shares of Tesla, 100 shares, not even 1,000 shares of Tesla. That's
Hmm.
not moving that price, much, if at all, right? So when you
Yeah.
talk about somebody like, BlackRock or Vanguard, who, those, I think some of them jokers own, like 12, 13% of, of Meta or Facebook.
Yeah.
Well, when those guys decide, hey, you know what, we're gonna trim our, some of our position. Well, what happens? That starts to move price around. You know what I mean? So
Hmm.
I think that with the Fed talking about being, that slowing down the rate hikes, right, or not being as aggressive with it,
Hmm.
that is giving people hope that, hey, you know what, man, there's a chance for that market, for the market to rebound. And again, it all depends on who you listen to, because they're even still saying that, yeah, we got a nice little rally going right now, but again, we're going into the new year.
Hmm.
They're going to still be hiking. So, does it have legs? Does it have enough where, it can sustain this? And, a lot of people on there, yes, while they are optimistic, some of them are still anticipating that there's still going to be, there's still more to drop from where it's at now.
For sure. For sure. Okay. Good deal, man. Now asset classes for portfolios. Uh, what are we talking about there?
So when you put together, I mean, in portfolio, man, the biggest word that people, if you don't know what it is, man, diversification, being able to diversify and do not
Okay.
have all your eggs in one basket. You know what I
Okay.
mean?
Yep.
So that's like saying, look, and I got $1 million and I'm betting it all on horse number 7.
Yeah.
You put that $1 million on it and 7 does not win. Well, there it is. All your eggs are gone. You know what I mean? That $1 million is gone. So being
Yeah.
able to spread that money around and saying, hey, you know what? Yes, I want a little bit in, some large cap and some small cap, mid cap,
Okay.
bonds, things like that. And we'll go through all, all those things and what it means. But being able to diversify a portfolio, man, and understanding what you are investing in, right? What are those asset classes? All right.
Hmm.
So what you don't want is a lot of things that are going to be overlapping. Right. So yeah, I've got, I'm in this large cap growth fund, and they have, their top 10 holdings are, Apple, Amazon, right, Google, Tesla, whatever it is.
Yep.
And then you're also like, hey man, I'm also in this large cap, aggressive or just a large cap blend, and they also are invested, their top 10 holdings are some of those same companies. Well, when those 10 companies are not doing well, right, you've got 2 funds that are not doing as well now, as
Yeah.
opposed to saying, hey, I'm gonna go with this large cap, I'm gonna go with with a mid cap, with a small cap, and just being able to diversify. And if you're talking more, even so, on a individual security basis,
Hmm.
you know, uh, don't just be fully in technology. You know what I mean?
For
You might
sure.
want to have some of your holdings in, in the financial industry, and consumer
Right.
discretionary, right, non-discretionary, non-cyclical, cyclical things.
Right.
Oil and gas. I mean, just diversifying, putting your money into different areas, right, man, and trying to find some of those correlated assets and trying to find some that are not correlated, right, or they have that negative correlation. So if
Right.
risk, it's playing, trying to hedge your risk a little bit. So when some of your portfolio is doing very, very well, you have some that are not doing so well, but that's okay, because that's there to protect you, so that when it flips and these ones that have been doing well start to come down,
Hmm.
these are going up. So just,
Hmm.
trying to keep that status quo, and again, just diversification. I can't stress it enough. For young investors
Right.
that are out there that are looking to do it, yes, you see these guys with the get rich quick, right? They're playing
Hmm.
these Bed Bath and Beyond options and things of that sort, man.
Yeah.
Make sure that you are putting away, and you are, like I said, diversify a little bit, man. Don't be afraid to put a little bit in bonds, right? They're a lot safer than your equities.
Uh-huh.
Being able to diversify. So
Yeah.
with some of your asset classes, all right, you're talking, like I said, consumer, some of the defensive stocks that are supposed to be quote unquote recession proof. All right.
Yeah, absolutely. What about commodities right now? I know gold and silver is generally, when the stock market is down, gold and silver is up, and vice versa. Uh, what do you think about those two right now as far as
I mean,
buys?
I hadn't looked here. I'll pull something up real quick and I'll tell you right now.
Hmm.
As far, gold, and the dollar, and investing in some of that stuff is, never a bad deal. Again, that's part of diversification, man. So,
Hmm.
uh, going back and just looking here from the beginning of the year, 2022, what was gold? This is the Spider Gold Trust I'm looking at here. we'll say January the 4th, it was at, give or take, $169. So it's down on the year overall. And it
Gold
started to
is.
rally back and everything. But again, having some of that stuff, man, your gold, your silver,
Yeah.
right? Looking at some of the commodities, right? A lot of people, orange juice, things of that
Hmm.
sort, that, again, that can help hedge some of the deals that, if you invest in technology this year, semiconductors, all that, man, you've taken a beating this year.
Yes,
So
you
having
have.
some of those things that have been able to rally and been able to, withstand, some of the issues that we've got going on in the market
Yeah.
is never a bad deal.
Yeah. Okay. Uh, and so I talked to, quite a few people. So did we talk about this investing in actual brick and mortar real estate as opposed to REITs on stock market?
So, I mean, investing in real estate, that's another way, yeah, to diversify portfolio, right? So I've got, a rental property or something like that, or something that, it's a second home that you Airbnb out. There's absolutely nothing wrong with that. Finding some REITs that are good, because a lot of those are good, uh, like a better way to put it, good dividend payers, right? So you
Hmm.
get those payouts with them. So again, another way to diversify. So you got some of your cash equivalents, right? You got equities, which are going to be your stocks, fixed income, right? So everybody doesn't know that I'm out, investing in bonds there. Uh,
For sure.
but it's always a good deal to, again, and you can invest in some ETFs that are real estate ETFs. You know what I mean? Because there's a lot of people like myself. Do I have right now what it takes to be able to go and purchase an investment property and all that? I don't want to have to deal with that. I don't want to be a landlord, right? So I can get some of those same kind of returns, all this stuff by investing in
Hmm.
some of these REITs. You know what I mean?
Yeah.
So just a way to, again, I can't stress it enough, man. Being able to diversify and understanding what you're invested in as far as you know asset classes, right? So your equities, right? Your stocks, your bonds, right? Any kind of cash or marketable securities, commodities, right?
Hmm.
Things that are you want things that are liquid, right? So that God forbid something happens, you have access to that cash.
Yeah.
Um, and being able to understand that, all right, now that I know, okay, I want to get invested in some equities, right? So I'm looking into some mutual funds or some ETFs, and then being able to break it down from there also, right? So you've got your large cap, small cap, mid cap, right? Those are going to be things that track different indexes.
Yeah.
Uh, and, things that are going to be, as far as when you're talking about a large cap, small cap, mid cap, they're talking about market capitalization. All right. So if you take however many shares that a company has outstanding, multiply it by the price, and that'll tell you, hey, are they a small cap, right? So they have certain numbers that, I guess thresholds, just, I mean, no different than, when they do classifications in high school sports, right? 5A, 6A,
Hmm.
they do that same deal.
Yeah.
Uh, so with large cap stocks, you're looking at, I'm going to lie to you and give you a number. I'm going to pull it up right now. Let's see here. Because then you got mega cap, I mean, there's all kinds of deals, man. Large cap. So here we go. Company capitalization, so more than $10 billion.
Okay.
So what's considered a large cap is, I mean, you have more than $10 billion. So if
Yeah.
you look at something like Apple, who's, at one point was $1 trillion company,
Yeah.
you take how many shares they own, they have outstanding, and then you multiply by that share price. And if that is, $10 billion more, then it's considered a large cap stock. All right, large
Okay.
cap company.
Okay. So, uh, large, mid, and small. So,
Yeah. So your mid will be between something like 2 billion and 10 billion, right? So it's
mhm.
crazy to think that you're talking about a mid cap company, right? But you're worth between 2 and 10 billion
$1 billion company.
billion would it be now?
Yeah.
2 and $10 billion, right?
Yep.
So
Yep.
yeah, and then your small cap is going to be anything from 300, I believe, 300 million to about $2 billion. So again, these just some of your smaller companies, and actually, I believe the Russell 2000, which is going to track your small cap stuff, has been one of the better performing this year as far as when you compare some of the averages,
Yeah.
excuse me, compare the indexes. One of the ones that has been, a lot of people pulled out of some of this, large cap stuff and got into more mid and small cap. So
Yeah.
yeah, way to diversify, man. It's not all about the Apples and the Googles and the Tesla, excuse me.
So
There's
let
some
me
good ones
ask you
out there.
this. I know absolutely, absolutely. A lot of the bigger stocks are pandemic busters, but they're also like a lot more money, per share. It just depends on how much you want to spend, how much your investment budget is that you want to put out there. Um, so S&P 500. 500 of the biggest companies. Those would be large cap, and something like Russell's 2000 would be like medium cap to small cap, or
Yeah, small cap. Yeah. So if you look at, like I'm looking at right now, man, looking at the chart, and it's saying that from about the year 2000, right? So over the last 22 years, that the total return on the Russell 2000 has been about 422%, where the S&P 500 has been 360%. I mean, so it's not just all about the giant companies that are, and
yeah,
again, some of those giant companies are very good. I mean, they're solid companies to invest in, right? I mean, Apple is a solid company to be invested in.
yeah.
Apple falls into what they call the mega cap companies, right? So more than $200 billion. So anything is, worth more than 200 billion, right? It's so large cap, 10 billion to 200 billion. Mega cap would be the $200 billion more.
So
Uh,
do companies that are on the Russell's 2000, do they aspire to be on in the S&P 500? I mean, is
I'm
that
sure. I mean, I would think that there's some companies that obviously they want to continue to grow, right? Well, how do they end up getting listed on those deals? Well, you got to fit the number requirement.
uh-huh,
So if you're a $300 million company, and over the
uh-huh.
next 5 years you end up getting into your company's now worth 4 billion. Well, now you're
Yeah,
considered a mid cap company, right?
yeah,
So
yeah. Something like that. Because I remember when the S&P 500 was listing Tesla, and Tesla had to have a certain amount of growth for like 4 consecutive cycles and that type of thing. Uh, but I wasn't paying attention to see if they were actually on the Russell 2000 at that point, and they were moving up to S&P 500. I was just an investor investing in them, you know. But yeah, that was a question that I had. I mean, that sounds likely for most of those companies, but yeah, I follow the Russell 2000 quite often because you can get some good value from a lot of those companies, and
sure.
so yeah, I've definitely uh looked at it. So man, I wanted to. I know we have been teasing this for a couple of weeks, but I wanted to get a couple of your book ideas. I have a couple of books. I wanted to get a couple from you. We're not making any money off of reviewing these
Yeah,
books or anything, but I like them, the ones that
yeah,
I
yeah.
have.
Doesn't mean I don't like them any less, right? They ain't paying us any
Yeah,
money. But now I'll tell you, that, when we do promote these books, if you guys do want to shoot us a little referral for increasing sales, you know what I mean, in your books. But no, there's nothing more
already,
than being
already.
able to, give people back, give back to the people and let them know that, man, there's easy reads out there you can learn from. You know what I mean? And
Yes,
no, we
sir.
do not get paid. There's nobody sponsoring us. We're not promoting this, that, and the other for, what I mean, for any personal gain. I mean, the only personal gain we get is knowing that we're helping others out that could use the help.
Absolutely. So I'm gonna let you do one. I'll do one. You do one. I'll do one. So
Perfect.
you can do your
Perfect.
first one, brother.
All right. Well, if we have any overlaps, we'll go through and talk about some of the others, man. But Van Tharp has a book called Super Trader, right? And it's
Yes,
one of
sir.
those that talks about making consistent profits. It's called Super Trader, making consistent profits in good and bad markets. And it's very good because he's very, very adamant on making sure you have a trading plan, which I mention every time we're on this every week. Making sure you have a trading plan, and I mean that's something that he truly, truly harps on to make sure that you have a plan and understanding. It's a bad market right now, right? There's no lie, right? There's no denying that, and there are
So
ways to still be able to be profitable while you're doing that stuff.
absolutely. And the book is Super Trader. The author is what's his name?
Van K. Tharp, Tharp is the last name. Short
Okay.
read. It's not as it isn't very long.
Good. 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 People like short reads.
Yeah, yeah, because I had when I was going to put out there, and I was like, man, that I know that's one book, man, that Tony Robbins, right, Money Master the Game and
Uh-huh.
Unshakable are both great books, but dude, you're talking like 600 pages.
Already.
And if you don't know a lot
Already.
about investment, man, those books are, I mean, it can overwhelm you. You know what I mean? Because
Yep.
I
Yep.
mean, there's a lot of jargon in there, a lot of vernacular that they use, and if you don't know what he's talking about when he says, hey, equity index funds, things like that, you're gonna be like, man, I'm not reading this.
Yeah. Yeah.
So
So my first book is one that I have actually uh put on the site. I've read it, and I've put it as an Audible book. It's called "Don't Worry, Make Money," and It is by Richard Carlson, PhD, called Don't Worry, Make Money. It's also a short read. It's a short book, about 200 pages, but it's a very good read, good insight into how money works. And
Like that.
it's called Don't Worry, Make Money. And I've enjoyed reading it and reading it for others. And yeah, that's my first one.
Yeah, man, I'm a big Audible audiobook fan, man. I put my AirPods in, man, at night and then listen to a book and fall asleep,
Yeah.
set my timer. I set it for like 18 minutes because I started, start off at 30 minutes. And I was like, all right, man, when I wake up, a lot of times when I miss the last, 10, 12 minutes of the book, right?
Yeah.
So
Yeah.
I've toned it down to 18 minutes, man. I'm still not getting through 18 minutes of the book, but, it's very easy. Man, I love Audible. I love to just, listen to books. So if anybody's got to commute to work, man, give it a shot. I think they give you, your first book for free. Give you
Yep.
like 30 days to test it out, man. So Audible is for sure something good, especially if you're not a reader. You know what I mean? If you don't like to pick up a
Exactly.
book, let somebody else let somebody else read it to you. You know what I
Exactly.
mean?
Yep.
For years, people were reading to us before we learned how to read, and then it's like when you get that job, right? You turn 15 to get that job, and mom
Yeah.
and dad used to buy my school clothes, right, in the summer. You got a job now,
Yeah. You can
get
buy
over
your
and start.
own.
You know what I mean? Yeah, exactly. So same
Absolutely.
deal. But yeah, man, no, I love Audible, man.
Yep.
The majority of my books that I read are usually, I say read, are usually Audible. I listen to them.
Mm-hmm. Okay. Your next book.
Oh man, so it's tough. There's two here, man, and I'm going to go with The Intelligent Investor from Ben Graham. All right, so if there's
Yeah.
only one investment book that you're going to read,
Yeah.
this is like, and it's all about value investing, right? And this dude is like they consider the godfather of this stuff. Uh,
Already.
yeah, and it's one of those, very influential, right? Written years ago, and the dude just knows what he's talking about. He's been uh, promoted, right? People like Warren Buffett, some of these being big time, names, investing names, are all people that, that recommend reading The Intelligent Investor.
Yep. Okay. No, I've heard of that book. And I like that book. I think that that's a book that definitely, it'll put you in it'll give you a philosophy. You may not have the philosophy of a Warren Buffett, but it'll allow you to sort of come up with your own philosophy. The Intelligent Investor, good book, man. So I
Yeah,
have,
man, it's really
mhm,
good. Go ahead.
I have one more. And again, this is a book that I've read, and I'm not near retirement age yet, but I like the book for people that are in that mindset. Like I'm in that mindset, even though I'm not there yet. I got about 15 years, man. But
I'm
I'm
with
in,
you. That's okay though, but you got to have that
yeah.
mindset, knowing that the light's at the end of the tunnel. You know what I mean?
Yep. Yep. So I'm there, and I like to let other people know that may be in my situation. It's called How to Retire with Enough Money. How to Retire with Enough Money by Teresa Ghilarducci, and just reading the book, man, very readable. I write. I have a book of my own, but so when I read books, I want books that allow me to read them and understand them, in a certain way. And this book definitely does that. Again, it's a smaller book than Don't Worry, Make Money. So, but it's a very good one. It's a good read. Uh, How to Retire with Enough Money, Teresa Ghilarducci. Very good book.
That's good, man. I got one more for you, and
For
it's
sure.
and the only reason I'm bringing it up is, man, because I just did it for my parents. I had to read it when I set up their estate plan. It's called Estate Planning 101,
Okay.
and it's something that everybody it's by Vicki Cook and Amy Blacklock, and they're actually two ladies that are the founders of Women Who Money. And it goes through what you need to consider, right? So, what is an estate, right? Why does it require a plan? Like, how do you determine what your estate is? What are some of the things you need to have in place, right? Because unfortunately, the only thing guaranteed in life are death and taxes, right? So, when you pass
Yes,
on,
sir.
what's going to happen with your estate? You know what I mean? And how do you minimize the estate taxes and things like that, and making sure that the people that you're wanting to pass it on to can keep a majority of what it is that you're passing on to them. You know what I mean? So
Yep.
talking about powers of attorney, right? How to ensure your income and your assets, and planning for your retirement, how to leave behind your legacy. Talk about tax advantages, right, with wealth and estate inheritance taxes. So very, very good. And that one again, short read. I mean, I think it's something like 200 and some pages, but it's a small, I mean, like physically a small book.
Yeah,
So there ain't a lot
absolutely.
of words on every page. I mean,
Yeah,
very, very, very easy read. I think I got to that thing in like a day and a half, man. And
good,
yeah,
good.
no, but it's very good, man. So people just understand, for all our viewers out there, that you need to start thinking about, and it's never too soon to think about your estate plan. You know, thinking about,
Absolutely.
early in your
Absolutely.
career, it may not be as important, still important, may not be as important, but as you progress, right, start hitting your 40s and you start getting to that point where you started, in your highest earning years, and making sure that, God forbid something happens, we're going to do, right?
Yeah,
How's
yeah,
your insurance working, right? Do you have a will, last will, testament? Do you want to set up a trust? Things like that are going to make a difference as to how your assets, get passed on.
absolutely. Good deal, man. Those are just a few books. We'll probably be bringing you guys book reviews maybe once a month, something like that. But there's a
Yeah.
lot of great books out there, and hopefully you guys are readers or listeners, and you can listen to books. It all works the same. Yeah, all right, big dog. So we're gonna we did this once before, maybe 2 weeks ago, man. We're gonna do it again. Let's look at some charts of some stocks, man. See how they look. Uh how about we check out uh first of all, let's check out the airline stocks, man. You know what is uh I like Southwest. Like so
Yeah, look, I already have that pulled up on my screen, man. It's funny you say that, man. Love, yeah. Yeah, ticker symbol LUV. You
LUV, yeah, love
Yeah,
absolutely.
for sure. One of the only airlines, if not the only airline, that has been profitable.
Okay. All right,
Yeah.
talk to us.
So, man, if you go to a screenshot, it won't let me share it.
All right. So again, I am multiple participants. All right, go ahead.
There we go. All right, there it is. Can you see it?
Yes,
All
yes.
right, there we go. So yeah, man, Southwest Airlines actually in the book called uh, Beat the Street. Right, Gary Ramsey talks about Southwest Airlines being one of the good ones, man. Something
Okay.
that people can kind of learn to do, man. When you learn a little bit about balance sheets and some of the financial statements, you can go through and you can read. And he gives some very, very good pointers on when you're looking to invest in a company, some things to look for. But Southwest Airlines, I mean, this downward trajectory that we've seen is not uncommon for almost anything in the market these days.
Yep.
For the year, it's on that heavy downtrend like everything else. But if you look right here, I'll increase the size here so everybody can see this. It's starting like it wants to make a rally, right? So it looked like it was going to push, and no, man, it's got a chance, right? And it reached a peak, right? Never hit the support resistance flip right here.
Uh-huh.
Hit it, right? Didn't like it, was rejected, came back down, took a drop. And this is crazy because they even, earnings, right? So you look at their earnings, they exceeded what market expectations were,
Yeah.
and there was still a drop, right? So I mean, it gapped down. If you can see this gap down here, where's it at here? So on earnings day, it ended up gapping down right here. So closed up here. So there's that gap that happened on earnings. And it looks like they may have reported, in the afternoon.
Yeah.
So it looks like, right, gap down. People are worried, like, oh man, airlines and travel and inflation and everything else going on. And then it looks like when they finally did go back and report, that it started to rally back. So you see, I mean, it was as low as what is that? It's a low for the day.
Yeah. So
36, you know what I mean? And it's, started to rally back. So, I mean, yeah, it's still on that downtrend, you know what I mean? But again, it just broke this level of resistance, right? Just got to
okay.
get it to close. It looked like it, kind of hit right in there and rejected it, came down, started to rally back again. So I think Southwest is one that I personally own.
Yeah.
I like it. You know what I mean? I like their business model. I like that they are still able to keep their fares fairly cheap. They don't charge for bags, which is always a plus, you know what I mean, when you're traveling, especially
These
traveling with
days.
a family, right?
Yep.
Yeah. So if you can't put it in the carry-on, man, at least, everybody gets two check bags. And that, I mean, that's huge, especially when you talk about, companies like Spirits and the other ones that are charging you $35 per bag, or, the first bag's free and the next bag's $35.
Okay.
But anyway, I
Well,
like their business model, man.
absolutely. I do too. Uh, I used to have some Southwest. I don't have any now, but I used to definitely. So looking at the chart, man, I don't want to get too technical for
Yep.
people right now, but so the red is and the red and the green, they're called candlesticks, but the red is bad and the green is good. Is that
That's how it is. Yeah. So the more green you see, the better it is. But yeah, the red is means there's, it's going down in price,
okay?
and the green is, it's going up in price. So what I'll do is I'll show everybody here. Let me see. Let me make this the body. Just make the green, and the red, just so everybody can see.
Yeah.
It's a little easier for people to see that what we're talking about here. All right. So yeah, candlestick charts. Brief here, right? So
Yep.
you'll have basically where the stock opens. So we'll take this most recent candle here, right? So it's red.
Hmm.
So what happens is right up here is where it opened at the top of this red candle. All right, that was the opening price. So what it opened that day, 38.27 is where it opened.
Okay.
And throughout the day, it went up, right? So you see the little wick up here.
Yep.
You see the wick and you see the wick at the bottom. So it's gone up and right, and it came down. And throughout the day, obviously, it's going to do that stuff. But based on where it opened at $38.27 and at the closing bell where it ended, which was at $38.11. So that's why it's red. It opened up here and price closed down here. So price closes lower than what it opened at. Well, then
And be red.
get a red candlestick. Exact opposite. If you go the day before, here I'll use this bigger candle right here. All right, so this is on November 3rd. Price opened right down here, so at about 35.96. All right, and then again throughout the day it goes down, it goes up. So it got as low as 35.49, got as high as 37.22. So it opened up right here, and it ended up working its way up that way. So it was a green candle, good. Green again. Green's always good. When
Hmm.
you get that rise in price like that, it's always a good deal. And there's so many chart patterns and candlestick patterns that people can look at and study, and it's all about your trading strategy and all that stuff. But really, what you're looking for the lay investor, anybody's trying to learn how to do this stuff, is try to find the trend. The people say don't trade against the trend. Well, right now, technically, it's in a heavy downtrend since, October of last year. So going back almost 13 months,
Yep.
on this downtrend.
Yep.
I start to consolidate a little bit. But if you can start seeing the trend and start to see how price action is moving. All right. So I was drawing like some new trend is coming up this way now. So what we're hoping for here is, right, it continues to, go up, come down. What you want to do is kind of break above where this red box is. If it can break and close above that and continues to work, you get this, almost like where I put it, a flag, right? There's a triangle. What you're hoping for is, because it's an ascending here, that it breaks above that. If it breaks above that trend line, well, now you have a shot for it to start to make it rally and start to, push price back up to to the levels that it was at.
Okay.
But
Hmm.
I like Southwest, man. Like I said, it's on a nice little pattern. It's on a nice little run here
Yeah.
since October 3rd. And it's going to have its up days and down days, right? So it was up and comes back
Yeah.
down. But if you see, the easiest way to explain is that it's making right now, the trend that it's on is that it is making higher highs and higher lows.
Right.
So here's the low for October the 3rd. All right, when it came down, well, this low is higher than this low. All right.
Yeah.
Well, here's another low higher than this low, right? So when they're making higher lows, which kind of sounds counterintuitive, it's a good thing because price is going up. You know what I mean? So
Yeah.
higher lows, right? And you start getting higher highs. Well, here was a high, came down, right? Oh, this high was higher than this high. Right? Okay,
Already.
this high up here was higher than this high. So got to wait to see what it does, right? Come back down, go back up. So
Hmm.
just a little thing like that, man. And if you can just learn, for the people out there that are trying to learn this stuff, learn how to just trend, like look at the trend and see how it's moving.
Yeah.
They're being able to identify, little spots of, support, resistance, and things of that sort.
Absolutely.
And that, will help.
So let me give you my very first stock that I ever
Mhm.
bought. I don't know. I don't even, do you remember your very first stock you ever bought?
Man, no, I don't even know if that company's probably still around because like I said, when I first got going, we were, it was penny stocks at the time.
Okay.
I'm buying
Yeah.
stuff at, a dollar a share and selling it at a
Yeah.
dollar 25. You know what I mean?
So when I was in college, I had I maybe went somewhere and I went to some kind of competition or something, and they gave us stock. And so, and this was like my first the summer before I went to college. So every 3 months I got a dollar paper check, like a dividend, a
Yeah.
dollar
Yep.
every quarter,
Yep.
all through college. So, and I eventually sold it when I got out of college, and it wasn't worth that much. It was one share, maybe 20 something bucks. But so that was my first year owning. But the first time when I started to invest and learn this stuff, the first stock I bought, and I bought it on a friend's recommendation, was SVXY. So can you go to
SVXY.
that? Yeah. To be honest, I don't even know what they do.
ProShares Short VIX
Yo,
SVXY. Yeah, that's a VIX
yeah.
short-term futures. It's a short-term futures ETF.
And
And
I
it's
didn't
probably
have it
those
very
that,
long.
yeah, it's one of those that's probably, looking at the volatility, right? And then
Hmm.
looking at short-term futures.
Uh-huh.
So everything is, the futures, you're talking about speculators, right? So
Okay.
speculating and having, and I won't say an investment philosophy, but when you talk about speculation, a lot of times you're talking about things that are hoping to buy something now and sell it to somebody at a higher price, right? So I'm going to buy something right now and I'm going to
Uh-huh.
sell it later at a higher price to somebody else that's a speculator, right? They
Okay.
don't care about the underlying business. They only care about stock price, right?
Yeah.
So there's times where even myself, I'm a speculator, right? So, people are like, oh, coach, what about this? Do you know anything about oil and gas? Like, guys, honestly, I ain't gonna lie to you. I know nothing about oil and gas, but I know that if it's on an uptrend, I want to buy and I, I want to be able to get it.
Absolutely.
Right. So there's a speculator in all of us as opposed to like some people that are what they consider investors, right? They're in it
Yep.
for the long run, right? They're parting,
Hmm.
they're going to be, those people that are buying part of that real business because they truly believe in the success of that business and,
Right.
the profits of that business, things like that.
So
So,
when I first bought it or was introduced to it, it might have been at 30 something. It made its way up to like 60 something, right when the pandemic happened, March of 2020, maybe around there, and then it went all the way. It went down quite a bit, and
there it is. I mean, you can tell when they
yeah,
look at that. Look at this fall from grace up here, man.
yeah,
I mean, I mean, from just here, I mean, from February of 2020 to
yep, yep,
March 18th, right? So almost
yeah,
exactly a month, that
quick.
thing's down
Yep.
65%, man.
Yeah, yeah, absolutely. And it's been a long road, but it looks like it's now starting to get back to around 60 bucks, man.
Yeah,
Uh,
have 54.76. I mean, take a look at it again.
yeah,
So talk about support resistance levels, right?
yeah,
Resistance means, prices going up, and where is it meeting resistance? Like, where it
yeah,
can't break through, right? So here would be one of those levels
yeah.
here.
And my
Looking at
boy that told me about the stock, he had a lot more than I had. So he held it a lot longer than I did. He finally got rid of it, but it was good for him for a long time until the pandemic and it just fell off a cliff. But if he'd
it
have,
happens.
if
It
he'd
happens.
still had it, if he'd still had that invest mindset, he'd be coming back around.
Well, I mean, and again, that's something that again, we talk about an investor. Do you believe in the business, right? So this
Absolutely.
was something that whatever. I mean, this happens to be an ETF, but if you believe, then we'll just say that this was, you know, Kroger.
Hmm.
You believe in Kroger, right? It has its fall from grace, but you still believe, like, what, this is all due to the pandemic. This has nothing to do with the business as a whole. This is because of what's going on in the world, and you believe in it. Then you come out and you say, what, man, I believe in this, and I'm going to average down, and I'm going
Yeah,
to continue to buy.
yeah.
So if you think about if you'd have, held on or
Continue
said,
to
hey,
buy.
yeah, and you buy, and we'll just, go from here,
Yeah.
and we'll give it. I mean, what is that from March 9th? Yeah, so March of 2020 to November of 2021, you'd have made back on. I mean, that's 154% gain.
Wow.
All right.
Wow.
So for people that,
Absolutely.
again, being investors that, believe in a company, they say, man, this is a buying opportunity.
And that's why I'm an investor and I don't just flip stocks like that.
Yeah, man. So there's things that, that if you believe in it, and I'm a wholehearted believer in that, man. If you believe in the company, keep putting money to it. You know what I mean? Now,
Yeah.
it's one of those where you're truly madly deeply in love with this company, but the financials are telling you, hey man, financials aren't very good. You
Yeah.
understand where that's at. I mean, I understand you believe in the company and you love the company, you love their products and everything, but numbers don't lie. Well, I guess
Yeah.
that's a lie because Sam Fried, Bankman Fried, just lied to everybody about the numbers and everything. But you know,
Right.
but when you look at a company's balance sheet and you're looking at their profits and looking at their income statements and things of that sort, you
Yep.
can tell if a company is profitable, right? Or they're doing,
Absolutely.
are they having to seek financing all the time, or
Yeah.
are they able to grow organically?
Yeah.
Uh, so all that stuff makes a big difference.
So if I was a lottery winner and I said, yo, Mr. Chinea, I wanna I don't I won $5 million in the lottery, and that's after taxes.
Mhm.
How many Berkshire Hathaway should I get?
Which one?
Would you steer
We
me
talking about
towards
A's
A?
or B's? We
I'm
talking
talking
about Berkshire
I'm talking
A
about
or B?
A's. I want A's.
You want
But
A's?
would you steer me to A's or the B's? I just got 5 million now.
Okay, so you're talking about 5 million, right?
Yes,
So
sir.
here it is. So you can see this, and that yes, that is the price to get them right there. You're talking
Eh,
$468,290 exactly for one share.
uh, yeah, I might want 10, but
Again, you better learn to diversify. You better take that 5 million and diversify it. Don't you put it all in Berkshire Hathaway?
okay, Mr. Chinea.
Yeah,
I,
don't. Yeah, let's not do that.
okay, so how many should I get?
And if you're talking about this, man, I mean, is that 5 million? That is 5 million you have strictly to invest. You got to live off of this. This is straight.
Absolutely, just to invest.
I personally probably wouldn't. I probably wouldn't even buy Berkshire Hathaway shares just because you're not getting.
Because Warren Buffett about to die, and then we never know. Once the head man go, you never know what's going to go with the company.
I'm with you. So here, we'll just look at now. Again, when you're talking about the profit that you're going to make on this, right? Just say that you bought one share.
Yeah.
So here on the Thursday, the 10th, it opened at 448,490,
Mm-hmm.
and it hit a high of 458,384. So I
So
mean,
that's
you're
what
talking about that's a 10 grand.
I made 10 G's in a day.
You made 10 G's in a day.
Hey man, I could live off that.
I know. The problem is what happens when you get days like this where it opens up and that thing ends up down here, right? Or here's that 10 grand you made that day. That's a beautiful thing, right? And
So
then come back
so
over here and
is
it loses,
so
10,
is it
15, 20,000.
is something like this good to invest, or is it good to like day trade or swing trade? Talk
If
to
you
me.
got $468,000 a day trade this thing, you probably don't need to be day trading. You know what I mean? So, I mean,
Okay.
it all depends on if you've got the money to do it. Yeah, I mean,
All I
certainly.
got is 5 million. I'm trying to. I
Let's
don't
say
got no
all
more
you
than
got
that.
5 million. That's a lot of money. I personally would not be buying no A shares now. I do have clients that have Berkshire Hathaway, their B shares,
Okay.
which are
So that's where you would steer me to my
a
$5 million
lot
dollars.
cheaper. A lot cheaper. You know what I mean? You just see more and again, it allows you to diversify. If anything happens to Berkshire Hathaway, and we'll just say something comes out, you get bad news, you get something, they don't. I mean, look, here it is. Earnings, they missed by $748 million, and but they hit everything else as far as the earnings, right? And something happens, and that thing tanks down to this level, right? 408,000. You're talking about losing $60,000. Multiply that by the 10 shares that you bought.
Mm.
600 grand, right? Whereas again, we
Okay.
talk about hedging, not necessarily hedging, but diversification and saying, hey, you know what, that's fine. I've got 3 shares of this. So when it's not doing as well, I've got money invested in other areas. So these other companies, right? You start looking at what's correlated, what's not correlated.
But I want a share, man. I want like some A
Oh,
shares.
so yeah,
So
so
you
so
gotta
buy you a
go,
share.
huh?
So buy one share. Hell, if you
Okay.
want to buy all 10 shares with your 5 million, that's it's your money. I personally would not be putting $5 million into one company.
Listen, I don't want you to talk to me about what you would personally do, man. I need you to tell me why I should buy B instead of A.
Because you're gonna get more bang for your buck.
Will I? Okay.
Well, I mean, when you think about it, again, you're talking about being able to buy however many shares of this, right?
Yeah.
10
Yeah.
shares, you say, right? Your 5 million is gone in those 10 shares.
Uh-huh.
All right. The profit potential, yes, is going to be, like I said, with a $10,000 move in a day. That's a beautiful thing. I mean, this thing opened at 394 on Thursday, October 13th, and closed at 415. I mean, so you made about 25 grand per share.
Mm-hmm.
Now, is that, I mean, that's great. But if for any reason you get a drop in price like you have here,
Uh-huh.
I mean, that is a loss of, it's 27% of your money is gone. You know what I mean? Whereas, yeah, I may have lost 27% here, but with the other stocks that I have that have done well, right? Because they're not correlated to this, I could
Okay.
have made back, right? Those other ones are up, 48% of that same time period.
I see
So,
what you're saying.
you know what I mean?
Yeah.
So I mean,
Yeah.
so overall you're up 21%. You know what I mean? Yeah,
Okay.
this is
Okay. I
down,
get you.
but because you got other stocks and other things, right? Because you properly
Right.
diversified, now you've got, right, that you can kind of offset those losses because these other
Absolutely.
stocks have done,
Yeah.
done better here. We'll try to find something that's not as not correlated to it.
You know what else I thought
Maybe
about?
Amazon. What's that?
And it's another expensive one. It ain't 400,000, but when I first got in the market, BlackRock. I thought about BlackRock, but
Okay.
it was really expensive. I hadn't looked at it lately though.
So look at this. So dating back to here, right? So we're going back November of 21.
Uh-huh.
AMGN is up 34, almost 35%. Berkshire Hathaway's up about 8.5%. You with me? Which that's both profit.
Yeah.
So good thing about that is we'll just say that, right in here, that, Berkshire Hathaway, when you got here, you were down 7 point something percent.
Right.
Right. Whereas Amgen up here, you were still up 5.5%. So you've
Uh-huh.
almost offset some of that stuff. You know what I mean?
Yep.
So being able to diversify, a lot of it too is how many, securities do you have, are you holding in your portfolio? Right. So people
Yeah.
are like, oh man, I should, only have five, only have three. I don't know the magic number. I know that just from my research and just from, just learning, right, education wise,
Mm-hmm.
that, between 20 and 30, right, 25 and 30 different individual securities,
Mm-hmm.
to make up a solid portfolio where, again, you got things that are correlated, things that are not correlated. This way, when when the crap hits the fan like it's going on now, you got a way to offset some of your losses. Let's see, here it is, correlation. Let me pull this one up. All right, so there you go. All right, this is just, a bunch of just random stocks here.
Okay.
So the S&P 500, which is in red, and let me close some of these things out of here, man, because that's a lot of damn color on that screen. Yeah, I mean, all right. So Amgen, Eli Lilly, Northrop Grumman.
Okay.
So here it is, Eli Lilly. When some of these are down, or like Amgen's up 72%,
Wow.
S&P 500, right? And they're just going back to 17. Let me increase this in size a little bit so that we can see. So you look, all right, S&P 500, right? Down, yeah, starting to rally. Cool. Well, here it is here. As the S&P 500 is coming down, you've got Northrop Grumman that is on the rise, right? So there's not a high correlation there. So
Right.
Northrop Grumman is rising while the S&P 500 is falling. You know what I mean? So somebody's like invested in, let's say the S&P 500 right, in ETF, while the S&P 500 isn't doing well, there are still individual stocks out there, right? So if
Mm-hmm.
half your portfolio, would just say half your money, your 5 million, you put 2.5 million into the S&P 500, and you put $2.5 million into Northrop Grumman, you'd be able to see that, hey, while yes, this is coming down, you know what I mean? It's been, the
Yeah.
S&P 500 has been doing great. Northrop Grumman has been able to make,
Yeah.
37%. Right.
Yeah. This is awesome, man. I like the way you can show me the charts and explain it to me because I can see it and I'm like, okay, I believe that because I can see it.
There we go. That's easier.
Yeah.
So, and that's all on, based on price and where it's at.
Okay.
How long, man? There we go. Back to where we're at. So from 2022, right, beginning of the year,
Mm-hmm.
the S&P 500 is S&P, the red line is S&P 500. So from here, you can see that it is on this downtrend, right?
Yeah.
Well, you take that same time frame and you see from Eli Lilly from the same deal. I'll just start from here. That thing's on this uptrend. Look at that. And I'll change the color so everybody can see that
Yup.
these colors kind of match up. That's the trend for Northrop Grumman. This is the trend for the S&P 500. Even better here. Look, Eli Lilly. Around that same time.
Yep.
Look at that.
Sure.
So again, making sure that you are properly diversified. That's where, you know, I mean, when you start seeing it like this, that, oh man, like the hell, look, Amgen also around that same time. S&P 500 is coming down. Some of these stocks are on the rise. You know what I mean?
Yeah. Yep.
Like I said, properly diversify, man. Diversification is key, and then making sure you spread it, you know, around. I'm not telling anybody to go out there and buy Amgen and Eli Lilly because, again, both you're talking, you know, in the medical industry, right? So
Right.
diversifying, hey man, I got some yes, and some, you know, healthcare. I've
Yeah.
got some in, you know, defensive stocks. I've got some that are, you know, growth. Some that are, you know, consumer discretionary. All right,
Yeah.
so taking some of that money that people make, right? How much discretionary income do you have, and investing in, you know, in some of those stocks, the Nikes and things like that. That, you know, do we need Nike? No, I need shoes for my feet. I don't need Nike. You know what I mean?
Right.
So, and then understanding what's going on in the market and in the country. I mean, they were just talking the other day, and I was actually speaking to my father about it, man. Things like Walmart, the dollar store, right? Dollar Tree, Dollar General, those things.
Yep.
Why? When things are getting, you know, inflated and prices are going up and everything, well, people still want to be able to shop. Well, what do I got to do? I got to be able to find somewhere where I can get it for a little bit cheaper, right? So, you know, companies like Dollar Tree, Dollar General here, I pull Walmart. So Walmart on that nice uptrend.
Yeah.
I mean, slow and steady wins the race.
Mm-hmm.
All right, tortoise in the hair. But
Let me
there
see.
you go there. Why? Because people, hey man, you know what? I love shopping at Target. You know, Target prices I can't afford. So I'm gonna go to Walmart. I'm gonna go buy it at Walmart.
Yep.
Man, look at this. Here's something that's very interesting for people to see. This is a gap down here. Right.
So what is
So
it?
they missed on earnings. Right. So earnings came out and Wall Street did not like that. You know, their earnings per share was not where they wanted to. So what happens? They get a sell off. All right. So gaps down. All right. Gets a gap down again.
Yep.
But usually when you have these gaps that happen like that, they fill the gap. So I'll make it so that this thing is so here was the other gap that it filled, right? So from the body of this candle right here to this candle. And what happens is, okay, man, it rallies, and what to do? It fills that gap. All right. It comes back down, right? And starts working again, it's working again, hits that gap. Oh man, we had a gap down again. Boom, right here. Don't know what happened there.
Yep.
But what happens? That likes to fill the gap. So there it is. Here's this gap right here, and it fills the gap. All right. Boom, comes back down, right? And it's like, all right, now we got to fill another gap. Oh, well, hell, it gapped up. Well, again, it's bound to fill that gap. All right, so it goes up, and guess what? Here it is. So from here to here, it managed to fill this gap right here. Now it has made it a point to fill this gap with this big red rectangle here. Look, there it is. Came back and look, filling that gap, filling the gap, filling the gap.
Yes, sir.
Yeah, so, you know what I mean? Finding those gaps is, you know what I mean? Hoping that, hey, man, historically, and you can go back and you can check, like, historically, does it go back and fill the gap? Well, looking right here. Boom,
Yeah.
there's a gap
Absolutely.
right here. You know what I mean? Gapped up. Well, does it stay true to form? It gapped up. Well, it's got to fill this gap somehow, right? And this, I mean, it gapped up. So you're looking for that gap down. Well, there it is. Boom, it just filled the gap. And these 3, 4, 5 candlesticks right here fill the gap.
And
there
that
it is.
happens.
Look, another gap. Pretty funny, man. We only done it for, you know, maybe, you know, not even a full year's or a year's time here. All right, boom, there's the gap down. It starts to rally. Here it is. Here it is. So we need to fill this red rectangle. We need to fill it back up. Well, sure enough, there it goes. There it goes. Boom, almost there, and it is now fully filled. All right, so that gap is now prices exceeded that gap. See what I mean?
Yeah. Yeah.
So, but Walmart, you know, people want to be able to get things for a little bit cheaper, right? Can't always afford to go buy,
Yeah.
you know, things, you know what I mean, that we want to buy. So we got to find them for a cheaper price. So understand what's going on in the country, right? Things like the dollar store, Dollar Tree, Walmart, some of these retail buyers that people can find deals.
Yeah.
And Walmart's Walmart's been okay. I mean, you're talking here, look, from the beginning of the year, Walmart, right? Oh, inflation, 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 inflation. And look, Walmart, man, hits a high of $160. They miss on earnings, right? Big banks, big financial institutions start to sell off, sell off, sell off. And then what happens? Here comes roaring back. Roaring back.
Yeah.
Get this stuff here, man. So there are things out there, man, that you can buy. Here's another one. And buy, in the sporting goods and all that stuff, Academy.
Oh
Academy's done.
yeah.
Yeah,
Yeah.
man. Academy's done well.
Yeah. I uh I still go to Academy for stuff, man.
I feel like I'm at Academy with my knucklehead son. I'm there all the time. Football season, I'm there 2, 3 times a season buying
Yeah.
mouthpieces and
Yeah.
cleats because he grows out of them. You know what I mean? In a matter of
Yeah.
months. Yeah, man. So, but Academy, I mean, has done well since May of this year up until
Yeah.
now. I mean, it's seen an increase in. Let's see. Well, I'll check percentage wise. I'll go to where it closed at on Friday. So, man, look at that. May of
Wow.
this year. Look at that. May of this year till up until Friday at the closing bell. It's up almost 90%.
Wow. Wow.
Yeah.
Yeah,
So
so
there are
that's
companies out there, man. Even in bear markets, there are companies out there you can invest in. You can find some value and some deals.
yeah. Yeah. That's what's up, man. Appreciate you showing us these charts, man. It makes it a lot easier to commit to something when you can see it in a chart, doing exactly what you say it's gonna do. Or
Yeah, well, I mean, again, and I don't have a crystal ball where I know exactly where price is going to go. There's plenty of algorithms and things like that out there, man.
right?
I don't necessarily make recommendations on. I don't at all. I don't make recommendations on individual stocks. I will go. Well, and the only reason I say that is, man, I want anybody to go through and say, "Oh man, well, I watched this deal and you told me to buy this." Well, I'm not telling anybody to buy it. I'm just showing you what the chart is showing us.
Absolutely.
Make your own. You know what I mean? You do your own due
And
diligence and make
but
the best choice you can for yourself and your investment style.
but I'm telling the people, I mean, they can see what we can see, you know.
Yeah, you know what I mean? So,
Yeah,
and I'm anybody thinking like, oh, man, this guy told me to buy it. And then, like I said, no, man, Academy's, 90% since May. And then
yeah,
Academy, falls out the sky because something happens.
that's self-explanatory.
Right. Well, and that's the problem, that we, not to say problem, but that's one of the issues that we run into, being an investment advisor is, making sure that people understand if I'm giving you some kind of a recommendation and you take it, that, people get upset about that stuff. So I
Uh-huh.
can give you recommendations as to what stocks have, what looks good and what is done, fairly well over, so many
Right,
months, years, whatever. But
right, right.
you
And
still got to be able to do your own diligence, man. And,
I've had people absolutely that they're like, well, I see you're winning. I want to invest in what you're investing in. I'm like, that's fine, but you don't necessarily have my temperament. Like when the stuff is down, are you gonna be chill like I'm chill? I mean, that's a big part of it. Like if you can't just invest it with somebody else investing in and just think that it's gonna be all good, you know.
yeah, you can't just go in and it's just like, they call it when you're, tailing somebody like, hey, man, I'm putting, I'm bet $100 on the Lakers tonight. Well, you know what? If you want to put on that's on you. You know what I mean? You can tell me, that's fine. But if
Yeah,
I lose, don't blame me. I mean, I didn't make it.
exactly.
You know what I mean? I don't make anybody
Yeah,
make any of those deals, man. But
because
even those deals,
I'm not betting the rent money on if the Lakers win. You might be. You know what I'm
yeah,
saying?
exactly. I'm smarter now. I know what my risk level is and what my tolerance level is for some of
Absolutely.
these deals.
Yeah.
But one of the deals I want to tell people is that, you have passive investing, you have active investing, right?
Right.
Most people, right, that don't have the time to sit there and do all the research and look through financial statements and all that stuff,
Yeah.
you want to be considered what they say is, a passive investor, right?
Mm-hmm.
You don't
Mm-hmm.
have a very aggressive investing style. Is one of those buy. You're trying to limit the amount of buys and sells you have,
Yep.
whereas you have somebody that's has the mindset, has the skills, right? The dedication to do
Right.
all the research and everything. It's more of
Mm-hmm.
an active investor, right?
Right.
Enterprising investors. And again,
Right.
that's all stuff, man. Again, here it is, The Intelligent Investor, man, by Benjamin Graham. So things like that that's going to talk about in that book, but understanding, do you have what's your tolerance for risk? So one thing I do with my clients is we're going to go through and I have a risk questionnaire that we're going to do and we're going to put together and make sure
Yeah.
that we know,
Yeah, exactly.
if scenario A happens and, you have the potential to make 30% or the potential to lose 27%, or scenario B where, you may only, you're okay with only making 7%, but you're
Yeah.
only risking 5%. The
Yeah.
worst case scenario, you lose 5%. Best case scenario, you make 7%. There's a difference in that. All right. And
Yeah.
then that investing style,
Yeah.
there's a huge difference on how, you go about that. So
Yeah, absolutely.
tell. Otherwise, I mean, I just make sure you do your own due diligence. Don't just go with what the talking heads say, man.
Right. And
Because
it's a lot easier if when you come up with your own investing philosophy. You know what I'm saying? Like you've got to know you. And you can't come up with a philosophy until you know your risk tolerance, and certain other factors,
how much you're working with also. I mean, someone
Yeah,
says, hey, man, yeah, I'm going
definitely.
to invest what you're investing in. All right, well, that's great. I've got, for example, I've got 3,000 shares of Tesla. And we'll just
Yeah,
say, Tesla's still back at the $800, $900. You know what I
yeah,
mean?
yeah,
Well, you don't have eight, nine, $3,000 that Amazon was at one point. Right? You
exactly.
can't just, do what I'm doing. You know what I mean? You might only have $500 to start with.
Yeah,
You say, oh, I want to be in what you're in. Well, I'm sorry, I mean, unless you're willing to buy stock slices and partial shares and all that. But so it's a big deal to understand, your
yeah,
own risk tolerance. What can you tolerate? How
yeah,
much are you willing to lose? How much are you're willing to put up? All
absolutely.
that stuff makes a difference.
Because I saw some people that had hundreds and hundreds of shares of certain stocks, and I had like tens of shares of those stocks, and I would lose, a few thousand, and it would irk me like in a day. They would lose like tens of thousands in a day.
Yep.
So that's how you think of me. Like I know I'm upset, but I know they're way more upset. You can't really just, once you have a sort of you reflect on it like that, it sort of keeps you balanced a little bit. You know what I'm saying?
Yeah, well, I mean, keep things in perspective.
Yeah.
Like I tell my son, man, and tell other athletes, right? Pearland, boys had a good season, man. They made the playoffs and they lost in the first round. And kids are, it stings, right? The loss,
Hmm.
loss stings. And
Absolutely, man.
try to tell them to keep it in perspective, man. People have lost bigger games, right?
Yep.
The Falcons lost a 25-point lead in the
And
world's
it's biggest
largest.
game.
You know what I mean? Right. You know what I mean? So just kind of keep things in perspective that, well,
Yeah.
yeah,
Yeah.
you lost money. And I mean, try to find some silver lining. Like, you lost, $5,000 today.
Hmm.
Joe Schmo over here, who's got, 30 times as many shares,
Yeah.
lost 500K today.
Yeah.
So,
Yeah.
just
Absolutely.
understand how it's, keep keeping things in perspective, man. And
Yeah,
understand
man.
that, money's going to come and it's going to go. All right. It's
So
going to come.
that's when you're investing, you need to, that's what you need. You need perspective. You need a philosophy. You need to know your temperament, all kinds of things when it's coming to long-term investing, you know.
For
And I
sure.
and I imagine day trading is a whole nother animal. I haven't
Oh, for
really
sure.
tried to do it yet,
Yeah,
but
for sure. Day trading, swing trading, scalping. I mean, there's so many different strategies you use, man. The one deal is,
yeah,
I mean, ideally is, and
yeah,
and I know we're out of time here, but just make sure that when you go into this, that when you've done your homework, that's huge, and
yeah,
make sure that you have, you have some kind of financial job. What are your objectives? What are your goals?
absolutely.
I mean, just investing just to invest. Well, I mean, and you're bound to lose money. You know what I mean? So
Absolutely.
just understand what is your objective. You know what I mean? I got a friend of mine trades options. Like, man, I try to make like $60 a day.
Yeah,
That's great. You know what I mean? He's got a plan. This is what he does to do all this stuff, man. So he's got some form of an objective. He figures, you know what I mean, over 200 trading days in a year at $60 a
yeah,
day, he can make a nice little profit. So
yep.
just make sure you have some kind of objective and everything. What it is you're trying to do.
Already, man. Appreciate it, bro. Another one in the
Likewise, man. Thanks for
books.
having me on again, man. Yeah, yeah. I appreciate you having me on again, man. This is good, man. I like it. We do this every week. Give the people something, you know what I mean? They can hang their hat on and watch every week and learn from.
Yeah, yeah, and I've been getting real positive feedback from it, bro.
It's
So
good.
we're gonna keep it going till the wheels fall off, and then we're gonna put them back on and keep it going some more.
That's what it's supposed to be, man. Hey, how did y'all do it Wednesday?
Uh
Basketball game.
we again, who you talking about? We played like 3 games last week.
You said Wednesday you had a game. I remember you said you had a game Wednesday. That's why we
We
had to we had
played
to
we
postpone
played
a bit.
Katie. Yeah,
Oh, okay, I got you.
Katie was tough. We came up short in the varsity game, which is the only one that matters. But yeah, Katie was tough.
All right,
We
man.
we
That's
just
all right.
won.
Long season. Long
Yeah, we
season.
we we won Saturday though. So
Good. Good,
yeah,
good,
that's
good.
what's up. And
Well,
that was
good,
our
man. I
first.
appreciate you having me on, dog. I appreciate you having me, man.
Yes, sir. And we'll do it again this week.
That'll work, man. I'll talk to you then.
All right, buddy.
All right, brother. Take care, man.
Peace. All right.